Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, November 17th, 2009. Well, folks, a very flat day on Wall Street today across the board. The Dow is up 3 points on the day, Nasdaq is down a half a point, and the S&P 500 is down 2 points. So you have a mixed bag on Wall Street. Interesting to note here that the market is trying to get through this 50 moving average, and I just want to draw your attention to a little bit of a trend line here that's developing, and it's basically mirroring the 50 moving average. You can draw it from the tops of this candle to this one and then what you're hitting there. If that can break through, you should make your first pivot high right here at approximately the high pivot from this point over here. That's at 111.20, and there's a possibility of going and testing this 111.50 level after that, and possibly the highs. Now, again, overall, what we're seeing today is pretty much a flat market, but the difference is you saw some selling early on the back of a stronger dollar. Since then, the dollar has weakened and come back in, and that has lifted the markets up. In tune with that, what we also have seen is the volume has been anemic at this point, literally non-existent volume ever since the morning session. You can see that. Look at where the market bottoms right here. See the market bottoms right here? Now mirror that up. There you have that dark red candle. Look at after that what happens. Look at how the volume just is tiny and minute compared to what we saw earlier. So basically you have a trail off here. Market still sells on a little better volume. And then as soon as the volume dies out to non-existent levels, look at these last few candles, how little volume there is. Literally no volume in this market, and that is keeping it floating. Now, again, we always utilize that kind of methodology that dictates when you have over 200 million, you will have down market. When you have under 200 million, you'll have an up market. Well, guess what? Today, 89 million traded on the SPY, and we're almost at 2 o'clock, 2 p.m. Eastern time today. So that just tells you that we're probably on pace for one of the lighter days in the last month or so, possibly the lightest day in literally 3 or 4 weeks, if not longer. And that has to tell you that the market has a small upside bias to it. And again, you can see as the market creeps up. Now, the spiders are still negative, but we saw the Dow is positive, S&P still negative, and you can see we're creeping up. So see this trend line, the first one I drew in, you are starting to break that. Your target would be initially 111.20, and if that breaks, you're going to look for 111.50 after that. So again, guys, no volume in this market. Market continues to float up. That can be expected based on the light volume. And look at the target. We almost have a first hit of the target here. There it is, folks, right there. Just hit it and just pierced it. So that's your first that's only a minor resistance level. That is only a minor level of resistance. Be aware of that. That also happens to be a gap fill highs of the day pretty much. And again, that was just tagged, as you can see. And literally, as this market is trading, I'm giving you the play-by-play and projections. You can see how accurate they are. Now, again, if this closes above this line, and again, you have to wait now for the close. We still have about 7 minutes left in this candle. If you close above this line that I just drew in, your next target will start to be this 111.50 level on this market. And you can see right now the spiders are flat on the day now. Nice little push there as the Dow has started to increase a little bit as we speak. The Dow is now up 15 points. Nasdaq has turned positive by 1.75, but the S&P is still negative by half a point. Any way you cut it, though, that's a nice little push there on the markets. Pretty much choreographed by the fact that you had 1, 2, 3 hits of this trend line and then blast right through there. All right? Now, again, dollar is starting to fall. Take a look at the UUP. Look at this, guys. See? See how the dollar is starting to fall? This is the UUP, the dollar index. Direct indicator there that the market's going to get a bid. Remember, when the dollar falls, the markets move up. When there's light volume, the markets tend to float higher. It's just the nature of the beast right now, and that is the way it goes. Now, the key is, again, what are we looking for on the intraday chart today? Again, as I talked about, you have a target here at 111.50. If you get through 111.50, you're looking at 111.68 or 69 here as the highs from yesterday. On the downside, if you were to fall back down, the big level of support is this pivot low in this orange trend line here, which happens to be 110.80 to 85. Now, why is this orange line so big? Well, if you go back to the last time when we pierced intraday the Great Wall of China, that was the high pivot right there. And see how it pulled back, and that basically established that high pivot. Now that orange trend line here is coming right into play. You can see yesterday we sold off into it, bounced. Then today we hit it once, twice, 3 times, 4 times, then came down on 5 times. You broke it, confirmed it. That signaled that this orange line would now become resistance to the upside. There it is once, twice, 3 times, then pulls back 4 times, 5 times, 6 times, 7 times, and the number 8 time there starts to push through. So you can see how that orange line really is working. You push up to the 50, pull back to the orange trend line again, and then look at this market start to get a bid here as the dollar starts to collapse down again. The dollar is continuing to be controlled by the Treasury and the Fed to make sure that you're going to see this market market really continue to float higher regardless of any type of action, all right? So you could have bad economic news, you could have bad earnings news. It doesn't really matter, especially when there's light volume, because what they'll do is utilize the light volume and just drop the dollar slightly, and the markets will instantaneously get a bid. And that's the beauty of it, folks. That really continues to be the beauty of the ability to control this market and make sure that this market doesn't necessarily have any big down moves. Now, eventually that won't work anymore, but for now it is working. It's working beautifully. So you got to tip your caps to them and say good job on being able to keep this market afloat for now. Now, again, the spiders are basically flat. Markets are pretty much flat on the day. You can see you're pulling back underneath that trend line that I just drew in intraday on this candle, but continue to watch the volume. The volume's a key thing here you have to be following along with the dollar. The dollar, again, just dipping. That's pushing the markets up there, although you are getting a little bit of a pullback on the spiders. Now, again, how do we go into the remainder part of the day? Well, you have to go into, as long as volume stays light, a neutral to upside bias, continuing to look for the markets to maybe just inch up a little bit. The volume continues to be anemic, as I mentioned. Again, I'm gauging 140 to 150 million today, which is well below the 200 million that you would need for a down day on Wall Street today. For the most part, a flattish day is what I'm expecting. Maybe a little bit of an upside bias, but overall a flat day off of the nice move yesterday. All right, guys, just a reminder, this is just a little template for what you get in the Research Center in the nightly videos. Very important to understand. I do 40-minute to 45-minute, sometimes even longer videos every night on key technicals on the daily, the monthly, the weekly charts of the SPY, which mirrors the S&P, the dollar, the gold, oil, you name it, even covering some stocks. The hot charts and alerts, I think there were 5 or 6 additions to the hot charts and alerts last night to alert people to certain things. One of them was the RTH, folks. Check out this RTH. 2 days ago, I alerted that this was coming into major resistance. Sure enough, look at the fall today, down $1.23, and that's all the way off the lows. Now it's trading up here. Look at when it was there. That was on the hot charts and alerts, alerted beautifully there on the RTH, getting slammed down as retailers not doing that well today. Target earnings had come out this morning. TGT is the symbol there, and look at that stock getting killed today on TGT. So understand that, folks. Included in that Research Center, you have the videos, the daily market report, the hot charts and alerts, Pro Trader watch list, hidden gems, technical tactic, and more, all included for that $49.99 a month. A no-brainer, guys. Just based off that RTH, you probably paid for about a year of the service just if you did a small position in that RTH. Very, very much a no-brainer. In addition, you can always join the chat room. We're in there 24/7 almost, well, from 9, a little bit before 9:30 all the way till 4 o'clock, giving you play-by-play trades. There were some good trades called out again today, some very, very solid scalps in the intraday stock chat, along with constant analysis, methodology, teaching, you name it, it's all taken care of in there. All right, folks, have a wonderful rest of the day. We'll talk to you soon. Take care.